clearly the Federal Reserve policy action should not be politicized. They get plenty of input from people that are, economically and otherwise independently in a position to give them input. For example, the Federal Advisory Council that I served on for 4 years meets with the Federal Reserve 4 times a year to give them outside independent input. So they get a lot of input that is not political. So I think they should be left alone to do their job. Having said that, I think Chair Powell is very accomplished in his job. He's very smart. He's a business person. He understands economics. I think they're doing the right thing. This notion that they're raising rates too fast and it's going to stifle the economy is inappropriate. The economy, as Sarah pointed out, is doing quite well. We have, good, solid growth. We have impending upward increasing pressure on inflation, and it is very appropriate for them to raise rates. It would be very counterproductive if they did not.
Kelly, if the economy is so strong, why did you need to lower your full-year revenue guidance today? I think that's one of the reasons we're seeing the shares down at the moment.
Yeah, well, so that was a little bit of an unusual short-term situation. That had more to do with a little bit of temporary softening in our mortgage business, which will likely rebound very shortly. And we had some timing with regard to some capital markets transaction fees, interestingly, most of which have already closed in the third quarter. So it was a very small adjustment and it was very temporary, so it's not meaningful.
Talk about loan growth, which did jump, but didn't change the guidance, and as it relates to what you're seeing in the overall economy.
Yes, our loan growth was very good. It was 3.5%, and a number of our portfolios, which we have been what we call optimizing, which is kind of restructuring the growth versus the yield. They have now started growing, so our aggregate loan growth is strong and is likely to get stronger. We and all the industry are facing substantial competition in the marketplace from the banking system and the shadow banking system. So, margins are not going up as fast as you might expect with rates going up. So you're not getting quite as much revenue growth out of it as you will, I think, in the future. So, but the underlying thing to remember is that if loans are growing, the economy is good, and ultimately revenue will grow at the banks and banks' profitability will be good.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.